Good morning to Dance Pop today. Good morning, Pedro. This is all special for you.
No.
Welcome, guys. Welcome to the show, Coffee Time with Marie Torossian, CPA. If you are returning to the show, welcome back. If you're new, give us a thumbs up or a hands up in the chat so we know you are new. Of course, we know as listeners, you would not be able to do that. Please make sure to subscribe and like so we still know that you are there. On any of the channels that you are watching us on, so you get all the alerts when we're going to go live. And I don't know if you realize today we kind of had some technical issues, so we had to go live a little bit late, but we're so committed. So anyway, but usually we would go live Thursdays, 10 a.m. Eastern time on Facebook, YouTube, and LinkedIn on Marie Torossian CPA page. I'm your host, Marie Torossian. I'm a CFO, an auditor, a certified public accountant, and a chartered global management accountant. I use my proprietary methodology, Valuation MT, to help business owners that reach their first million to 10x their profits. And with that, I also have an e-course available for those of you that have not reached that first million to help yourselves get ready for that million. You can find that program on theprofitlab.biz/programs. I'm also a Grant Cardone licensee, and I coach businesses in sales, marketing, money mindset, and finance. And you can find some of my business coaching plans on theprofitlab.biz/plan-pricing. I'm also the author of a couple of books, The Complete Guide to Business Growth and Business Owner's Guide to Operational Accounting. Those books are available to you at theprofitlab.biz/shop. As always, I'm joined by my friend and tax colleague, Pedro Gonzalez, CPA. Good morning.
Good morning.
How are you today?
I'm doing good.
Good.
Yeah.
Guys, we're laughing because, this is like an inside thing. If we're going to talk about it. It's like Pedro, being on the tax side, this is like today is a very special day we're going to talk about in a minute, but yeah. I'm going to let Pedro introduce himself as usual.
Yeah. Yes. Pedro Gonzalez, CPA, your business and tax strategist, helping you as an entrepreneur, as an investor in the areas of taxation, minimizing taxation, improving your cash flow, and developing exit strategies. So we go beyond the basics. If you are, serious about growth, just reach out. We can help you develop strategies that can help you reach those financial goals. We have the Real Estate Investor Guide, which is also available for those who are interested in either expanding their knowledge about real estate taxation, how to save on taxes, and or those of you that are either new or somebody that might want to expand in their understanding. You'll be surprised how many things out there, how many people we come across that have been doing. They get a big surprise when they see that they've been overpaying in taxes. So even after many years, so
yeah,
there's always room for improvement.
Absolutely. And just to kind of read out, where they can find your real estate book, just for the listeners, Pedro, you can find Pedro's The Real Estate Investor's Tax Strategy Guide on pedrocpa.com/The Real Estate Investor Guide. So that's pedrocpa.com, The Real Estate Investor Guide. So before we start today's, conversation, just again, we always do a quick summary of what we talked about in the past episodes. Today, by the way, is our 50th episode. That's 50 Thursday commitments.
Yes.
Rain or shine, tech problems or not, we are here to serve you.
Yes, we are.
So in the past, we've talked about, financial analysis. We've talked about employee tax credits, employee tax retention credit, my apologies. E2 investor visa requirements, business plans and projections. We've talked about motivation, discipline, goals, all the different things that would help an entrepreneur in their business. We've talked about inventory management, which is a really, really big thing. Not a lot of people talk about it. Inventory management is a very, very big area. And it needs a lot of attention. We've also talked about the different 1099 forms, 1096 forms. We've talked about partnerships partnership sale. We've also recently talked about foreign, investors having an EIN here. We've talked about how to record an employee tax retention credit when you receive it, or more like when you realize that you should receive it. And then, of course, we talked about factoring receivables. So today, we want to focus on one of the biggest things. Today's date is September 15th, and there's a big relevance to it. Right, Pedro?
Exactly. I'm sure a lot of people are like, you'll be surprised how many people still, after so many years, when you tell them today is the deadline, they're, what? What are you talking about?
Yes.
Because, they file those extensions back in March, and you keep, reaching out, and then it's like, I'm not telling you, they put it like in the back burner. They throw it away. It's like, I don't want to think about it. And here we come. It's time to file, my friend.
Yeah, absolutely. So all of you who have S corps and you filed your extensions, today is the day you have to file. So Pedro, what happens when they don't file?
They go to jail.
I love this side of Pedro. I like it. On the edge a little bit, because Pedro hasn't slept all night because he needs to be committed to filing your taxes.
Exactly. So no, but it's, there's a penalty, failure to file penalty, and there's a penalty that it's I think it's $210 per month, up to 12 months. So for every month. So the other thing to keep in mind that is not prorated by day, meaning that you file the day after, they charge you the penalty for the full month.
Understood.
Okay.
Awesome.
Yeah, there's no proration on that. So.
Understood. So with that, so at this point, anyone that is delayed, they should really try to get it done as soon as possible. And then, of course, the next deadline that they should pay attention to is the October 15th, which is correct, for mostly individuals. Yes.
Exactly. And the individuals that filed extensions, C corporations. So today's date is, in essence, the easy word to remember is kind of the pass-through entities. Your partnerships, your S corps, your trusts are due today.
Understood.
Yeah, calendar year. You know what I mean? So we're assuming right now we're discussing this calendar year, and then October 15th will be your C corps and your individuals.
Understood. This is awesome. So everybody, don't wait till last minute. And really, the reason we end up pulling long-nighters or more like all-nighters is because, everybody waits until the last minute, and then they want their tax accountants or filers to do this magic of doing things, on time. So I think the responsibility at the end of the day is on the taxpayer, not the filer. So let's just put it out there, and not being sarcastic here, but just truly the burden is on you, the taxpayer. So it is your responsibility to provide documents in a timely manner. So the tax filer, the tax preparer, the accountant, the CPA would actually be able to schedule you within their process of filing. And so when you see your tax CPA accountant, please give him some love. A big hug.
You don't know some of the challenges and the efforts are being made to help their clients avoid those penalties. But again, like you said, the responsibility is really on the taxpayer. The client is the one that has to provide the information on time and to give adequate time to the preparer to do it correctly. You know what I mean? Because again, and then when you receive those notices, then keep in mind that if for some reason you provided the information late, incomplete, and you rushed or pushed for filing because you wanted to avoid the $200 penalty, and then you receive a $3,000 adjustment, then don't get upset. Just realize that this is part of the process. I mean, it either gets done fast and potentially with errors, or it's done, it's done with time and time to digest it. So then you digest it and have a nice, nice meal. It's like when you try to, gulp down a big meal and then you're
And you're gonna choke on it.
you choke on it. Exactly. That's basically what it is. I mean, you need to, if you want it done correctly, it takes time. You know what I mean? And again, we have said it many, many times that the whole thing is about record keeping and bookkeeping.
Yes. Yeah, absolutely.
And if you do this on time, see, like right now, if you're not done your 2022 accounting, now's the time to do it. Don't wait until January.
Yes.
Or, now is the time, because now is when most of the tax preparers, and if you're a tax preparer or your bookkeeper also does tax preparation, the fourth quarter probably they'll have a little more time to devote to, help you, recreate some of the history of the 2022. Coming in March 1st to try to do the whole year 2022 can end up in disaster.
Absolutely.
You know what I mean? Because you're trying is to slam this process and push it because I don't want to file an extension.
Right. Right. Absolutely. Absolutely. And then which brings me to, those business owners that have multiple businesses, they need to pay attention to this quite a lot, because a lot of times they have multiple businesses and each one of them is being done in different ways. Too many people have touched the books, they made too many changes, and then they rush to file and they want it done right away. But then as accountants, we also have to make sure that what we're filing makes sense. We have a comfort level with the numbers you're giving us. We don't audit them, but we do need to have a certain amount of comfort with the numbers you're providing, that they make sense. So, right, Pedro?
No, you're right. And this is something, again, that I would say any serious tax advisor, accountant, CPA that is committed to their profession, it's going to take time, because remember, we are signing this also.
Mm-hmm.
You know what I mean? Yes, the ultimate responsibility is the taxpayer, but we take it, seriously. So we want to make sure. And listen, this is also for your own good. If you go through one of these, tax mills, I mean, that they just push in the numbers, they'll process it. And this is another thing, it's unfair for you to go to one of either your accountant or your tax preparer and criticize the fact that they're taking the time to analyze your numbers, to process it, and asking you questions. I'm telling you, it's better that be your accountant, your tax preparer, asking you these questions, and sometimes the tough questions, and instead of an IRS agent and asking you this question, because it's not the same approach, and it's not going to feel the same way. So, be glad that your accountant and your tax preparer is asking you these questions. Hey, about this, show me the invoice. Let's look at this transaction again. Why this way? Why? Show me. Because we want to, and also in a way, protect you. I mean, rather let's make adjustments now.
Exactly.
Think through the transaction now before we file.
Yeah, absolutely. This is something you said. The key word is to protect you, and that's exactly what I had a conversation with a recent client where I'm working with another CPA, assisting them as they file taxes. I was helping them with cleaning up books for their clients, and being an auditor, I just go through things like as if I'm an auditor. I'm just looking at everything. I'm questioning every single paper, thing that I see. Mm-hmm. And eventually, when I talked to the internal bookkeeper, she's like, I got so scared. I don't know. I was not sure how I would answer your questions. And I said, look, my intention was not to scare you. My intention was to help you, protect you before someone else comes to look at these books. Right. I'm trying to make sure that you are audit ready, to make sure that now you start thinking about the stuff that I'm asking, so that as you're looking at 2022, because we're still cleaning up 2021, that you start thinking about these types of questions that are going to come your way.
Yeah.
So it's a very, very good thing that you said. That's exactly what happened, this past couple of weeks now. So another thing I wanted to bring up, Pedro, and you jump in anytime. So with these business owners that have multiple businesses, they end up loaning one business to the other, all these different intercompany loans.
Yes.
And then we're trying to do the taxes, and you're like, what? How did you pay that? And then, of course, you try to ask for, let's say, can I see the copy of the check? Which way? Well, that's going to be hard to pull out. Well,
Yeah.
I cannot prove anything then. I cannot say that, is this really a loan? Do you have a loan document? And
Yes. Exactly. Yeah, you're
it
right.
becomes a chaos.
And I know, we already had the episode about the IRS and the increase in audits.
Yes.
And you're bringing up these topics that you're discussing right now, and those are serious topics that are in the checklist of IRS agents: intercompany transfers,
Hmm.
distributions. The money that especially which is very common of S corporation shareholders just extracting money out of their corporation, and all of that is going to be heavily scrutinized. So, and we already discussed this, that the highest risk is going to be the small entrepreneurs. I know that they say, well, it's not intended to affect, but really where the highest probability to find audit adjustments is going to be
Yes.
in the smaller companies, because the larger corporation has a battalion of CPAs, attorneys.
Right.
These numbers are double, triple, quadruple checked.
Exactly.
And they'll be like you said, do you have a loan agreement? Yes, we have a loan agreement. I transfer this money, and they'll create memorandums, they'll create minutes. Everything is backed with one transaction. Here's the backup for this,
Yes.
because they have the resources for that. Now, the smaller entrepreneur moves money from one end to the other. They loan money, they give money, and they don't realize that at times it's either a loan, it's a gift. Gift has a tax implication. Oh, well, I just,
Exactly.
I sent it to my brother, and there's no documentation. Just money's being shuffled
Right.
around.
Right.
And
Absolutely.
anyway, so there is those are a high risk, and again, I keep emphasizing the importance of the documentation. And it's hard to go back. And I understand when you mentioned, it's hard. Yeah, it is hard. It's hard to go back. Now to ask you to go back to even January 2022.
Right. Right.
To go back and find a transaction. But imagine if it's an IRS agent, you tell the IRS agent, "Oh, it's hard."
Yeah.
I'm telling you, they're
I
gonna
can't
say, "I
remember.
don't care. I need this documentation, or I'll remove it." You know what I mean? I'll
Right.
consider it a non-deductible item, or they'll look at it, they'll count it against you. You know what I mean? So you have to support it. So don't give me the it's too hard. As you know what I mean? It's we're doing this is to help you out. Now the other options that we file, like I'm telling you, how many audits we go through, and it's the lack of documentation. Oh, I don't know what my preparer did.
Oh,
Because
yes.
you know what I mean.
This is coming up quite a lot.
Yeah,
This is coming up quite a lot. I don't know. The prior accountant booked
yeah,
this entry. Why did you not question it?
correct.
There's no supporting document. I can't take the same steps or understand why they did it that way.
Correct.
You told them a story at the time. Obviously, they made that entry based on that story. Now
Yeah,
nobody knows the story.
nobody exactly. They claim that
Exactly.
somehow the preparer pulled that out of thin air, and it's like, but do you meet with it? Where did he get or she got this number? I don't know. What do you mean you don't know? I mean, what are you telling me, that the accountant or the preparer just pulled a number out of thin
Yeah.
air, 1,000, $344. I mean, who comes up with that number? I mean,
Right. Right. Right.
so
Absolutely.
there has to be, again, the importance of documentation, the review. Yes, we are times we're very hard on our clients, but it's like coaching. I mean, if you want improvements, we have to press. You know what I mean?
Yes.
Otherwise, and I tell people, I'm not the CPA for everybody. You know what I mean?
Right.
But I'm not also going to be sitting around and just to watch you kind of, blow up your business, because I know what will happen later is where were you, Pedro?
Yeah. Yeah.
So uh, it is, like you said, the importance of taking responsibility,
Hmm.
having a good professional next to you. I mean, and I know that you press and you press, and that's the right attitude. I mean, in the end, your clients need to be happy that you're there to push,
Right.
because that's how you're going to see the results. Either be as a business coach, or as a business advisor, helping them with their accounting and the tax. I mean, it's good. That's what they're hiring you for.
Yeah, yeah, absolutely. And then here, I just want to make a quick note for other accountants or CPAs that do end up making entries into their clients' books. I really highly recommend them attaching their work paper. I understand it's their work paper, and by law, they don't really have to, but when they attach it, they're also proving themselves that they've done the due diligence. So the client cannot say, "Oh, well, I don't know where they came up with it,"
Mm-hmm.
because as soon as the accountant is changed and those numbers don't make sense, now the books are being changed too many times. So I think by having a copy of that, basic work paper or the explanation or documentation of what was done would really help out. And for me, I do that all the time. As an auditor, I'm always thinking someone should be able to, look at the work and be able to repeat it. So even if an IRS agent came in to look after, okay, what is this for? Okay, I get it. I see the analysis that was done, right? So there's an actual, support documents for each and every journal entry. And then you enter sometimes, and you look at some accounting done by people that don't know how to use the system well, whether it's QuickBooks or whatever, and they use journal entries. And I think we mentioned it in the prior episode where they overwhelm the system with so many journal entries with no support. Again, there's no support. Like there's no spreadsheet, there's no support, there's no documentation of any kind. It's just a journal entry by itself. So really, guys, it has no meaning. It's not a true deposit. We don't know where to find that information. You don't have internal documents. This is really a massive red flag. So avoid doing journal entries. Use the software like the way you're supposed to. And if you don't know, ask someone or have the business owner hire a secondary person that can review the work and help guide this work. So it's very important to have, at least one person doing entry, the other one reviewing the work, right?
Yeah. Yeah, no, you're right. I mean, it should not be the especially major transactions. When surprises me when a business owner has no recollection of what that.
I know.
What I mean? It's like, it should not be happening. If that's the answer, that means that you don't have the right connection with your advisor.
Right.
I mean,
exactly.
That's what is happening.
Yeah. For example, I know in one of the books that I was looking at, the person eventually said this was a big chunk of deposit came into from one company to the other company. Finally, it was like for fixed assets. Mm-hmm. Okay, great. What did you buy? Why is it recorded in notes receivable? So it's like there's obviously a story there, and maybe there's a valid story there. It's just that it's just not enough information, an email, a request, or something that proves what was discussed, why the check was written out, and why it was recorded that way. So you guys have to start thinking through all the support documents that you need to make sure that when you're recording something, it makes sense. We're close to the 30-minute mark, so we can have another extension of this conversation. And I had it hybrid accounting. Especially, this is a new hype. Hybrid accounting. Yeah. I would really say just pick one. That's my preference, but hybrid accounting.
Yeah, no, you mentioned something about that. It's like, I don't know. I'll let you start, and I'll
add you can add on. So apparently, hybrid accounting apparently is the combination of both cash and accrual basis accounting. So in hybrid accounting, you're basically using cash basis for everything, with the exception of, let's say, inventory, or you would have to then record accrual basis. So my thing is, if you were to record everything accrual basis, you can always remove any accrual effects and come up with your cash basis reports. So by creating a double way of entering things, I think most people are confusing themselves a lot more than they should. That's my personal point of view. And I think they're doing it because they want to have mostly accrual basis accounting in their books, but then they want to do tax base for their taxes. They want to do cash basis accounting. So then they do this hybrid accounting in the books, but it makes it more difficult to track.
Yeah, I know that there was at one point something called the you don't hear a lot, but it's called the modified cash basis. Um, but this thing about the hybrid, like you said, I mean, I don't either keep your books on a cash basis or accrual. I mean, it's really not that complicated,
Right.
in my opinion. I think if you have a good accountant, they can help you get it done properly. You can have a different method for tax, and then have a book to tax difference. And again, that can be addressed through
Absolutely.
a book to tax adjustments.
Absolutely.
But this thing about the hybrid is, I guess, that you can choose what thing is an accrual basis and which items are on a cash basis. I don't know. I guess I'm not. I have not come across much of that. I've seen it either. Most of the small businesses, with the exception of those in retail that have inventory.
Right.
Maybe if you're doing a lot of invoicing, you should probably do, if you're doing the invoicing, and you should consider is the accrual basis. I mean, that is allows you to account for your invoicings and your payables. If you're purely cash type of business that you sell something, you collect it, and that's the end of the transaction, like in maybe a small amount of inventory, cash basis will suffice.
Will work. Right. And yeah, I mean, if it's a very, very, very small inventory, like let's say if they're doing less than $1 million, right? Let's say the inventory is not even hitting $1 million. Like, you could still use cash basis and, recognize all the revenue when you sold them. And then you write off the cost of goods sold, everything that you purchased. So, and I think it's about working with the right knowledgeable, bookkeeper or accountant that can actually do those for you. One of the things that I noticed as well, when people want to have an accrual basis QuickBooks, and so someone told me, well, QuickBooks doesn't do accrual. I'm like, I get that, but it does somewhat of an accrual basis if you're recording the bills in a timely manner, if you are, recording the receivables in a timely manner. Now, it wouldn't do a payroll accrual for you per se, but that's very easily, accrued, let's say, off of QuickBooks for just the presentation purposes. So, what they do is that they'll end up doing all these crazy entries into, let's say, QuickBooks or the software that they're using. And then now the books are no longer, let's say, being run in both ways, cash or accrual. So I think the software should be used for the way they're meant to be. That's my preference. And if someone really wants to go, very extreme, just have everything in accrual basis, just you can do it always, off of outside of the software. Now, there's other softwares that you can do accruals very easily, but QuickBooks is not one of them for sure. I totally get that. But yeah, I think mixing stuff inside of a software that's not meant to do something is very difficult. And then trying to explain those different policies, accounting policies to an auditor is just going to create more, questions, more red flags than anything.
Yeah, if you reach QuickBooks is a decent software. I mean, it's not meant for every industry and every size of company. You probably get to a point that you probably outgrow QuickBooks, and then you might have to move into another software.
Exactly.
Or do something like you said. There's some add-ons that you can do to enhance what QuickBooks doesn't do well. I mean, there's inventory management software add-ons. There's other,
right.
You know what I mean? That you can add. It will work. And then nowadays, with a lot of the apps and things like that, I mean, there have been a lot of improvements. Like patches that they can add on to your QuickBooks. So then it enhances what QuickBooks is not necessarily originally designed to do, but there's these other external software that you can purchase and enhance what you already have.
Right. Absolutely. Absolutely. Well, this was a great conversation today.
Yeah, I'm sorry. Today I was not very talkative, but man, I'm low on fuel.
That's okay. You did great. You did great considering you've been working all night and you still have to work to wrap up the final tax return filings for today. So I appreciate you showing up and staying true to your commitment, my friend.
Yeah, you're very welcome. And the same to you. You have stayed strong and on this commitment. I encourage the listeners and the viewers to also to join you on the Profit Lab because there's obviously different topics over there that are not covered here. And
Right. Right.
you need to also be again, if you're serious about a serious entrepreneur, this is a good investment. You know what I mean? It's gaining access to good information, solid information, and at times to be challenged. You don't want a professional that is simply going to be a yes man or yes woman. You know what I mean? Just to tell you, you're good. You know what I mean? Yeah.
Tap in the head.
Yeah, exactly. I mean, you need somebody that's going to times, challenge you and shake you up a little bit.
Yeah, absolutely. And I appreciate you mentioning that. So we usually on the Profit Lab podcast, which is similar to what we do here, it's a video, it's a show, and then we have the audio version as well. We'll invite entrepreneurs, business owners from different walks of life to tell their stories. So if any of the listeners on this show would know of a business owner that should be on the other show, please make sure to have them submit an application to support at theprofitlab.biz.
Good.
Awesome. So with that, it is already at the 30-minute plus mark. And I want to leave you guys with a quote from motivational speaker Jim Rohn. You are the average of the 5 people you spend the most time with. I hope we are 2 of the 5 people you are spending your time with to learn and grow your business. Until the next episode, 51. Have a wonderful and blessed rest of your week.
Awesome. Take care.
Take care.